the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors and companies to watch. But as always, a quick recap of how we started. Well, Singapore shares fell today as investors continue to mull heightened trade tensions globally. Now, the Straits Times Index was down 0.27% at 3,957 points at about 1:30 p.m. Singapore time, and that is with a value turnover of 672 million Sing dollars in the broader market. Now let's take you through the closing numbers. The STI was down 0.37% at the close at 3,954 points. In terms of value turnover, we're looking at 1.43 billion Sing dollars. The gainers stroked losers 231 versus 251. Top advances for the day, we've got Prudential USD, Sembcorp Industries and Asus. And top decliners, we've got here GMH USD, ST Engineering and UOB. Well, in terms of companies to watch, we have Sembcorp Industries because its wholly owned subsidiary Sembcorp Utilities signed a deal to raise its interest in Senoko Energy to as much as 70%, more than doubling its current 30% stake. Now, elsewhere, all eyes remain on the US with President Donald Trump poised to impose sweeping new reciprocal tariffs on its trading partners tomorrow morning. Also in focus, how the Land Transport Authority issued a street hail service operator license to Singaporean ride-hail and delivery company Grab, and what this could mean for the country's taxi industry. Now, lots to watch, and joining me on the line is James Cheo, CIO, Southeast Asia and India at HSBC Global Private Banking and Wealth. James, welcome back.
Well, happy to be here.
Great to have you. And James, let's start with the US this time around. After all eyes on the country with President Trump poised to impose those sweeping new reciprocal tariffs tomorrow morning. Still quite a bit of uncertainty relating to the format of the duties. Would it be 20% universal? How are global investors gearing up for the levies in terms of Wall Street reaction and Asian market reaction today?
Yeah, well, I think it will still be extremely fluid, given that we haven't. It's hard to kind of get a firm view of where the direction of travel will be. So therefore, I think from now to, of course, announcement, everyone's on the edge to try to kind of see what the announcement will be. But clearly, I think if there is any kind of signs of whether words used like selective or even tiering of or even negotiation, any hints of that, I think those would actually kind of cheer markets on. So I think people are watching out what's the main headline rate and then how would it be implemented. I think it's still a lot of uncertain moving parts that are out there.
So investors more of a wait-and-see approach at this moment?
Yeah, I think so. I think it's worthwhile for investors to, wait and see and then, don't jump into it at this point of time. We have been encouraging investors to kind of take some risk off the table even before going into this 2nd April kind of Liberation Day, just to be a bit to err on the side of caution. And let's see how it plays out before we can take a firmer decision.
Yeah, and just for our listeners, Wall Street major indices ended mixed overnight, and if we look at stock futures right now, it's down anywhere between 0.24% for futures on the blue chip Dow and down 0.41% for futures on the Nasdaq. And, in the meantime, James, we've seen how the European Commission's President Ursula von der Leyen warning that the EU has what she called a strong plan to retaliate against Trump's duties, though the bloc would prefer to come to the negotiating table to work things out. How concerned are you about escalating global trade tensions, and do you think Trump is using tariffs as a negotiating tactic? Will U.S. trade partners back down, and how far are countries risking a full-blown trade war?
Yeah, well, it's hard to extrapolate further, but it's clear that Europe is coming together. I mean, we have seen even a few weeks ago a kind of bigger commitment to doing fiscal programs, infrastructure spending, the defense bill. And I think with threat of tariffs, clearly there will be kind of a bending together of sorts. So you are seeing, more and more activity even within Europe as a result of these kind of uncertainties of trade policy. So yeah, I think there are certain sectors that could actually start to kind of be a bit more doing a little bit better in this period of time. So I mean, given that Europe is starting to kind of pick things up.
I see. And the next big question is, James, what do you think are the consequences of a full-blown trade war if neither parties want to back down?
Yeah, well, I think at the end of the day, what the U.S. wants to do is in a way to get countries to buy more American goods, reduce that trade deficit, and also ultimately to invest in America. So, and the end goal is to kind of reinvigorate that whole NMO spirit. But clearly, I think in the short term there will be uncertainty, and that's where I suspect there might be some path for negotiation. And if investors can see any opportunity for that, that would be some reprieve. That will create some reprieve for markets.
And let's talk about the gainers and losers of, Trump's tariffs. U.S. retail titan Walmart is reportedly pushing its Chinese suppliers to cut prices to offset Trump's tariffs, and some Chinese manufacturers reportedly are finding it difficult to meet Walmart's demands to cut prices by as much as 10% for each round of Trump's tariff. How are global firms reacting to the planned levies? And the question perhaps is, ultimately, who will be the biggest gainers and losers? What does that mean for global investors?
Yeah, well, it really depends. At the end of the day, you need to have companies that have strong pricing power, and ultimately, I mean, with higher tariffs, the consumers will be the loser because ultimately the cost will be passed on to consumers. So unless the companies are able to operate in a much more efficient manner, they can absorb some cost to a certain extent. But if it becomes too exorbitant, at the end, there will be pass-through in terms of higher prices to consumers. So I think at the end of the day, I don't think there will be real winners if this uncertainty gets out of hand. But I think we shouldn't jump to conclusion. Let's take things as it goes, and there could be from the pattern of how things were since the start of the year, there could be pullbacks in terms of hawkishness when it comes to tariffs.
Yeah, and James, going back to the Singapore stock market as usual, how did the STI fare today? Any surprises when it comes down to the biggest movers and the sectors that they lie in?
Yeah, well, I think generally, global markets and even Singapore, it's a very cautious wait and see mode because no one at this point of time would want to take a big position. So everyone's on a wait and see, a bit of a cautious mode, and then thereafter, after 4 a.m. Singapore time, then maybe we will see the reaction and then the strategy.
I think we can expect to wake up to more headlines. Now, if you're just tuning in, we're now in conversation with James Cheo, CIO Southeast Asia and India at HSBC, Global Private Banking and Wealth. Well, zooming in on the companies to watch on the SGX for today, James, we have Sembcorp Industries. Its wholly owned subsidiary, Sembcorp Utilities, signed a deal to raise its interest in Senoko Energy to as much as 70%. I know you don't comment on individual firms, but generally speaking, what are the motivations for utility companies to expand their capacity or to expand their operations right now?
Yeah, well, I think for utility companies across most countries and cities, it's really to deal with the rising demands on energy. Like it or not, it's just as countries grow in terms of the city, energy demands goes up. And now if you add in the demands from the use of AI, for example, AI data centers are extremely energy intensive. So I think that's where utilities companies are trying to, expand their assets when it comes to energy generation, and also trying to run it more efficiently if they can consolidate some of that. And also, they have also decarbonization goals to kind of meet. So quite a lot of things going on for utility companies. But ultimately, I think they are trying to be more efficient by being a little bit bigger to serve the rising energy needs that the world needs.
Yeah, and another company to watch, James, this one is Singapore Post, because several executives from Singpost, they appear to have abruptly exited the company, 4 of them in key roles in the latest leadership changes at the firm. So a spokesperson from Singpost said the firm is actually undertaking an organizational restructure taking place across several months, as it had previously shared. Again, speaking in generalities, how far do such departures by a firm's leaders raise concerns or alarm bells for investors?
Well, as with all companies, I think governance is always very, very important. So this is one of the kind of key qualitative kind of aspects that investors kind of look at other than financial ratios, because ultimately governance, leadership all adds up, right? And I think that would contribute ultimately to good financial performance.
James, I've got about 2 minutes to go, and let's take some time with this one. An interesting piece of corporate news out of Singapore. The Land Transport Authority issued a street hail service operator license to Grab. Now, this will make Grab the 6th taxi company in Singapore. What could this mean for the country's taxi industry and for Grab, given how it wanted to buy, I think, Transcab previously based on reports? How would it reshape the competitive landscape of players in the traditional street-hailing taxi industry?
Yeah, well, with more players in the taxi industry, obviously it will create competition. And of course, more competition, it's always positive for consumers. So it means there could be more competitive pricing. And of course, peak periods might, where prices go much higher, that could, start to see some stabilization. And also maybe you get better kind of shorter wait time. So I can't wait to kind of see those improvements when I use my ride-hailing app in future.
Yeah, so Grab Taxi, Grab Car. The next time you go on your Grab app, you'll have Grab Cab as well. Let's hope for shorter waiting times. 30 seconds to go. A quick one over here, James. We've got as far as investors are keeping their sights on, the Trump's tariff plans, we've also got the ADP private employment numbers out tonight. What are you expecting on this front?
Yeah, I think it's important that we have to continue to monitor the health of the labor market in the U.S. So, and it's not just ADP. Friday we have non-farm payrolls as well. Yeah. So, consensus even for non-farm payrolls is around 140,000 jobs added. But I think people will want to watch whether are there any associated cuts from the government, sector. Yeah. So that's something that's going to be closely watched, and let's see whether all these jobs are released, will they pick that up. But I think so far we should still have a fairly healthy labor market, but let's wait and see. Okay,
lots to watch indeed. Hopefully not too many surprises when we wake up tomorrow morning. Thanks so much, James. That was James Cheo, CIO, Southeast Asia and India at HSBC Global Private Banking and Wealth. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.